that have that ability to go out there and, tap their sphere as well. It just allows us all to create that much more success.
This podcast is for educational purposes only. Nothing you hear on this show is legal or investment advice, nor is it an offer to buy or sell securities. Always consult your own legal and financial professionals before making decisions. Welcome back to another Capital Flow podcast. If you're looking to raise $100,000 or more from a single investor, this is the show for you. I've got a great friend and future partner. We've talked about doing a lot of deals together. Unfortunately, it just hasn't worked out. But we got Mr. Mike Roeder here, and we're super excited to have him in the studio. He actually flew in out of state to be here with us in Arizona. It just happened to work out perfectly. But Mike is involved in over $400 million worth of apartment investments and has raised well over $100 million in equity for these types of deals. So definitely going to have a great conversation today around raising capital. Mike, thanks so much for coming in.
Thanks for having me on, Dallon. I really appreciate it.
So to kick things off, just share with our listeners a little bit about who you are and how you got started.
Yeah, most definitely. So I really need to rewind back to 2008, 2009 is when I got my taste for real estate. So my wife and I, we had been dating for a handful of years, decided to buy a old 4-bedroom house near campus. We were both going to St. Cloud State University up in central Minnesota, bought a house that was built in the 1920s, which, as you can imagine, had lots of issues with it. But what we decided to do with that house is we had 4 bedrooms. We rented out 3 of the bedrooms. We lived in one of the other bedrooms. I think our mortgage at that time was $600 a month. We rented out each of the bedrooms for $300 to $350. So we were cash flowing a little bit. Plus, we weren't paying to live there at the same time. So we kind of fell in love and got hit with the real estate bug at that time.
And this was 2008, 2000. So before Bigger Pockets, before house hacking, before this was kind of what I would consider common knowledge. I shouldn't say that because a lot of people still aren't aware of it, but this was way before all that. So was that something you guys it just made sense?
Exactly. It just kind of came to us. I don't know what prompted us to do that, but we were looking at bigger houses and it just made financial sense to do that. And at first it worked out great. We had 3 of our good buddies living with us. They paid on time or paid rent ahead of schedule. It was awesome. Then we turned that into a full-blown rental. We moved out, bought a primary house, and that's where we started to have some issues. Now, overall, the single-family space was still good to us, but, I was self-managing, doing all the leasing, doing the evictions, doing all the maintenance. I didn't know what the heck I was doing on the maintenance side either.
You still have a full head of hair, too.
Yeah, barely. I got some gray hairs here. So it definitely weighed on me. I had a couple young daughters, and I just remember getting done with work in Minneapolis. I was a high net worth insurance producer for a Fortune 500 company there. I'd drive back to my house, which took about an hour, and then I'd drive up to my rental properties another hour, do some maintenance or deal with the tenants. I remember having some tenants show up on my doorstep because I was a knucklehead and gave them my primary address. And, I remember one story of a guy coming up to our front step and he was crying because he was filing for bankruptcy. And it's like, you're emotionally attached at that point, and I probably didn't make the right decision. I gave him flexibility, and obviously he drugged me through the waters, which was unfortunate, and lost a lot of money with that single tenant. But that really showed me that you either have to have a certain personality to manage these single family rentals, or you have to have some separation and either have a management company or separate yourself and hire a third party management company. So that's how I got my start. And then obviously, eventually we worked our way into the apartment business.
What was it about the apartment space that drew you to that?
Yeah, that's a great question. So I actually kind of got pushed into the apartment space. So my business partner, Dan Breezy, he had been a professional snowboarder for, at that time, 8-10 years or so, was one of the top guys in the industry. And so he was making a decent amount of money. And his CPA had advised him to start buying apartment complexes to offset his income. And so that's what he did. And I remember having dinner with him one night, and he's like, Mike, why are you going through this hell buying these single family rental properties when you could be scaling much quicker. You could have third-party management in place, managing these deals for you, and we could put our heads together and buy something together. And it's like, gosh, that is a really true and valuable statement. And so we ended up going into business together, bought a 20 unit together, bought an 8 unit together. And then in 2017, we started our company and started to syndicate projects, which, means pooling capital together to buy, bigger real estate.
So looking back, because your journey isn't, it's pretty typical. People start in single family and they kind of work their way up. Looking back, if you knew what you knew about multifamily now, would you have done things differently? Or do you think that process and what you went through is a good plan for anyone looking to get started?
Yeah, so I think, gosh, it depends on your situation. Looking at my situation when I first started, I didn't have, barely any capital. So maybe I would have gotten creative like I did, bought a house for 5% down, turned it into a rental. Then we used a 401k loan, I think, on one of our other single family rentals, which was certainly helpful. So I might still do that in my early ages, but if I had a little bit of capital to invest, I would probably find a team that's, successful at real estate investing, piggyback on them, see what they're doing, passively invest, and go that route instead.
So let's talk about that for a minute, because knowing what I know now, part of me wishes I just passively invested from the beginning.
Yeah.
But I got into real estate, and I think a lot of people do because you associate rentals with passive income. Mm-hmm. You shared with us some of the horror stories and things that you went through managing your first property. So for that person that's in regards to, they're not sure if they want to be actively involved. They might want to own real estate, but they're not sure if they want to be actively involved or passively involved. What would you say to that person?
Gosh, so I would take a hard look at it and try to talk to some people that are active investors and understand the time commitment that's going to go into owning that real estate. I think about our apartment complexes, whether it's a 20 unit or 150 unit, there's a lot of time and effort that goes into those deals and a lot of stress if you want to asset manage them correctly. Now, sure, can you buy a deal and step away, let the management company do their thing and just check out? You certainly can, but in almost every situation, the performance is not going to be nearly what it could be, if you actually asset manage the deal properly. The other thing I think you need to look at is, how much real estate do you actually want? What is your plan? We see a lot of active investors out there that will start buying apartment complexes and they have a demanding job. They might be working 40, 50, 60 hours a week, and all of a sudden they get 2 apartment complexes and they're just completely overwhelmed because of the amount of time and effort that it takes. So take a step back and understand the time commitment that it's going to take and what you really want as an investor.
Those are some excellent points, and I think a lot of people underestimate what really goes into it, especially when you start getting into large multifamily. Sure, a single-family home, couple homes, a few fourplexes, but a lot of people start as a side gig when they're working a full-time job, and then it gets to a point where they realize they need to make that transition into the real estate full-time. And what we found with our passive investors is they want the benefits of owning real estate, but truly they don't want the hassle or the stress of it. So you've raised a significant amount of money. I know when we started, I said 100 million. I know it's north of that. Clarify with our listeners how much equity your team has raised over the last few years.
Yep. So we've raised about 162 million, and we started syndicating properties back in 2017. So that's been a 7-8 year run.
162 million is not a little bit of money. It's quite a bit. So some of our listeners might even have a hard time fathoming that. To break it down, though, we work with a lot of the same types of passive investors in regards to them investing smaller chunks at a time. 50,000, 100,000 here and there. Maybe there's some high 6-digit investors. So outside of time that it's taken to build these relationships, what would you say has been one of the greatest factors for you and your team to be able to raise that amount of equity?
Yeah, that's a great question. So all of our offerings have been 506B offerings. So they're offerings where we have a pre-existing relationship, with these investors that are looking to passively invest. I would say the biggest thing for us has been track record and just how we asset manage and how we communicate. It has just made all the difference in, the number of investors out there that are referring us to their friends, their family, their colleagues. And so we saw that ramp up substantially over time. And speaking more about that, we're known for our good communication. So we try to put everything on the table with these deals, on our monthly updates, or, if we have more frequent updates, we want to paint the picture of the good, the bad, the ugly, what we're doing to correct the issues, take videos while we're out at the properties. So that way the investors feel like they're there and they can see what's going on. And so the more open that you can be with investors, the better. Now, early on, raising capital, I think, both Dan and I are very ethical, down-to-earth people that, people can relate to. And I think that's what you need to be, when you're communicating with possible investors, is just be yourself. Make sure you're answering their questions very thoroughly and quickly. Do what you say you're going to do. All of that really, really matters.
It really comes down to building trust. Mm-hmm. I mean, these people, a lot of them are writing $100,000 checks or more. And I read the statistic a while back, 80% of Americans make $100,000 or less per year. Mm-hmm. And so attracting that type of capital, it takes time. And it really comes down to that trust. What was it like raising for your first major deal? You had these smaller deals, these smaller houses to begin with. When you got into your first major apartment deal, share with us a little bit about that experience.
Yeah, it was scary. It was a 45-unit deal, so a very small deal. We had to raise a whopping $575,000, which seems really small to us, but obviously to each their own. I'm sure there's some individuals where that would be a large amount. But I remember, myself staying up until, 1 a.m., putting together the webinar. It looked very rookie-like, but, we went out to our sphere. We had done a few events where, we had a small database. I think we probably had, 200-300 people in our database, and that included a lot of family and friends and colleagues and whatnot. And, we didn't necessarily pitch them. We just gave them the information. Hey, here's what we're seeing. Here's why we like the deal. Here's why we like the location. And the funds came in very quick. I think we were fully funded within about 4 or 5 days.
Jeez.
And we did $25,000 minimum investment, so it was a very small barrier to entry. So it went really well, but it was scary at the same time, especially because we had close friends and family in our deal. And we do that on a lot of our deals. And it just makes you want to perform that much more when you have, people that you actually know.
Let's talk about sales for a minute, because sales, when a lot of people hear that term, they get like this bad taste in their mouth. Mm-hmm. And we've had some guests on, we've had some sales coaches, and we're really trying to change the mindset around really what sales is. Because in reality, we're selling every single day. Like, you and I are happily married. We have to sell ourselves to our wives every single day that we're a responsible husband, a responsible father. So I think a lot of people get this idea of what sales is. Were there any limiting beliefs or things that you and Dan had to work through to feel comfortable asking and attracting this type of capital?
I don't necessarily think we had to work through issues on the front end. Like, we were fine presenting the information, to our investors, but actually asking for the capital, doing like a follow-up call. Hey, is this something that you want to invest, in? Are you ready to commit? Something like that. I think it took time and effort, and we actually have people on our team now, that do the outreach after the first webinar and, make sure that they're answering all the investors' questions and everything. So I think that certainly came with time.
And to people listening to this, I know before I've matured in the space, when I thought of a salesperson, it was the very like high energy, nonstop talking type of personality. And I've actually found some of the most successful capital raisers in our industry are anything but that.
Yep.
So talk to us a little bit about your experience around that idea.
Yeah, I think that's 100% accurate. I go back actually to my insurance gig that I had. So I was a high net worth insurance sales producer, and we sold personal lines insurance, home insurance, auto insurance, umbrella, some yachts and small aircraft. And, I take a look at all the agents that we had in that organization. I think there was 150, 160 insurance agents, and I was, top 1 or 2 every single month.
Wow.
And, I'm not that smart of a guy. I'm not super good at sales, but I feel like I'm decent at connecting with individuals and figuring out what they need and what they want, and then presenting that data. So I think that's what allowed me to be successful at that career. And, going back to the real estate space, I think the same goes for real estate. You want to paint the picture. You want to make sure that the investors have the data that they need, and then ask for the decision. But I couldn't agree more with you, Dallon, there.
Awesome. Let's rewind a little bit to 2024. 2024 was an interesting year in our industry and for a lot of people in the investment space, whether it's real estate or not. What were some of the things that you and your team did to still be able to maintain momentum and still be able to raise even in a difficult market?
Yeah, a couple of things that we've done over the last year. So we added a in-house capital raiser on our team. So he's going to be assisting with developing the relationships, going to the events.
Hey, Dallon here. We'll get right back to the show, but I gotta share something with you that's been a complete game changer for us. Let's be real. Creating captions and content for social media can feel like a full-time job in itself. I used to post maybe 7 times a week. Now I'm dropping over 50. And it's not because I suddenly found more hours in the day. It's because of the one tool that changed everything. I spent a few $1,000s getting my own ChatGPT copywriter program to sound just like me. And now I'm giving you the exact step-by-step blueprint to program one yourself completely free. Why? Because honestly, I wish somebody would have done that for me. So go ahead, click on the link in the description or show notes below to access a step-by-step guide so you no longer have to let social media and a lack of online presence be the reason you're not raising more money. Click the link below. Now let's get back to the show.
Dan and I have spent a significant amount of time, networking and going to events, and you only have so much time in your day to do that. So that has certainly helped. We've also, implemented Go High Level, which I know you guys utilize as well, and just, working on drip campaigns and making sure that our marketing is on par for our investors. So those have been a couple of things that we've done. We've also tried to stay in front of our investors on all of our projects, whether it's a new project or an existing project. Again, going back to communication, making sure that we're communicating what's happening with the deal, and then educating our investors on what's happening in the market. I think a lot of investors get so consumed with what's happening in the market, and so they feel like everybody knows, but that's not the case. There's a lot of investors out there that are unaware, and they're not reading the articles every day and reading the industry reports and talking to other investors. So educating those folks on, hey, here's what's happened with interest rates. Here's what's happened with capital markets. Here's what's going on with, rent growth and vacancy rates. So that way they understand a broader picture and understand that right now is actually a really good time to get into the industry, in our opinion, because we're at or near the bottom, which is typically a great time to get in.
Yeah, I couldn't agree more. So speak to those people that are afraid or nervous to share bad news. I know some operators, they're afraid it's going to impact their credibility, maybe their egos, maybe they'll take it personally. I'm interested to hear your thoughts around even sharing the bad news and when things aren't going as planned.
Yeah, I think if you hold off on sharing that bad news, it's only going to snowball. And so it's going to continue to get worse and worse until you can't hold it back anymore. So share it early on and share what you're doing about that issue. Multifamily, you and I know there are going to be some issues along the way. It's just inevitable. If you have, 50 tenants or 100 tenants or thousands of tenants, like shit happens. And so, just be upfront with your investors, share what's going on, share what you're doing about it, and do that on a consistent basis. And I know people very, very much appreciate that.
It's just the open lines of communication is what I found, and it builds trust. Like, I like to think most investors know that shit happens. Like, it's going to happen. It's not a matter of if, it's when. I think trust is lost is when they feel like operators are trying to hide it. Or they're trying to play it down for what it is. So we found in our experience sharing bad news, good news, share all the news. Just keep them informed. It opens up that level of transparency. And we're in a unique situation because we don't asset manage. We work with groups like yours, but operating a fund, our news that we often share is why we say no to deals, because our investors are always looking for that next deal. And we realized that actually sharing with them why we didn't invest into a certain deal is actually an incredible way to build trust with them. So outside of sharing news, what has been one of the most effective ways you and your team have been able to really build this trust with people?
Outside of sharing news, that is a great question. Think about it here.
I got a follow-up one for you that we might be able to answer that one.
Yeah.
A lot of people are raising capital. They tap their small network, friends and family, tap it pretty quick. And then they're like, where do we go from here?
Yep.
You guys have raised a significant amount of money. When you hit that point, what was your transitional period? What did you do? What are you currently doing to get in front of new capital?
Yeah, so I would say the biggest thing that we did along the way was network like crazy, especially earlier on in our investing careers. So, going to all these events, speaking to individuals, we learned over time that, quality is better than quantity. So if you go to an event, instead of stacking, 60 business cards, take some time with those individuals, get to know them. Yeah, sure, you might only meet 5, 10, 15 people, but they're actually going to remember you and vice versa. So spend that time, follow up with individuals. That is huge. If you have one conversation, the likelihood of them investing in one of your projects is probably pretty slim, even if you have a drip campaign or whatnot. So make sure to follow up with that individual and see if they have any questions. See if you can jump on a Zoom call or an actual call to get to know them better. So I would say those are a couple of things that we've done that have helped significantly over time.
Networking terrified me when I got started. In fact, you and I met at one of my first conferences I went to, and we've been in contact for 5-6 years now. Your families come out, families have met. We went flying, we've hiked. Those are the types of relationships that people are really looking for. And we met at a conference. Now, at that same conference, I remember this vividly. I was sitting there talking to people, networking, because apparently that's what you're supposed to do when you go to these conferences. I didn't know it at the time. And the gentleman walked up, said, hi, my name is, I don't even remember his name, handed me a business card and walked away. And I'm like, what am I supposed to do? Hi, nice to meet you. Like, who are you? What's this for? So, I mean, there's always that post-event follow-up, but I knew nothing about the person. I couldn't even tell you his name or what he looked like. And so when you've gone to these networking events, what have you found to be an effective way to, and maybe you're more comfortable at them. I wasn't initially. I was very uncomfortable. So for that person that's terrified or nervous about going to these networking events, what's some advice you could share?
Yeah, I would say if you're terrified about going to an event, prep a handful of questions, and go over those questions before you get to the event. And just know that a lot of the other individuals in that room are probably pretty similar to you, where it might be their first time or, they might be an introvert. And so just understand, the conversation doesn't have to go perfect. Go up to them, ask them about their family, ask them if they've been investing in real estate or if they've invested in real estate before. It can be very, very basic, especially when you start to network in a space like that.
That's super solid advice. Just come in with questions. Yeah. One of the things I learned very early on is that people are more than willing to share and talk. Mm-hmm. And especially when you go to a networking event, people are there to network. So if you have questions, there's nothing to be concerned about, afraid about. For me, it was just a matter of breaking the ice. Like I was always uncomfortable breaking the ice, always happened my entire life. Once I connect with somebody, then we're able to get into some really good conversations. And all jokes aside, honestly, that's part of the reason I have this goofy looking mustache, because it's an icebreaker. It's something that people remember, they talk about it, and then we can get right into a conversation. So out of all the things that you've done over the last few years in regards to raising capital, if there was one thing that you could hone in on and share with our listeners to be like that secret sauce, what would it be?
I mean, I would 100% follow up after a webinar.
Mm-hmm.
We typically, so rewinding, let's say 3-4 years ago, it was just Dan and I, we had 1 or 2 other team members, but they weren't on the capital raise side or the follow-up side. And so we'd have the webinar, we'd track who was soft committing, who was coming in the door, but we didn't have enough time to call all those individuals, to answer questions, to send out mass texts, to do, all of the extra legwork. So we have a lady on our team now that'll follow up with, every single one of the individuals, making sure to give them a white glove experience as they go through and sign their documents. And it has helped tremendously on, how much capital we're bringing into each deal and how much is being converted. So that has been a game changer for us.
People need those consistent touches, and you and Dan are two people. You can only do so much. So
yeah, exactly. And it's, no matter how easy you think the process is of investing into a multifamily deal, it can be complicated for some individuals. And when they feel that complication, sometimes they might just drop it and be like, I'm just nervous. Not going to do this right now.
Yeah.
So you just need to make sure that you're walking people through that.
A lot of us have been in this industry for a while. We understand the process. We've studied it. To somebody else, especially if it's their first time, it can be scary. And if they get scared, if they get nervous, they lose confidence. They might trust you, but if they don't understand how everything's going, it can definitely cause you to lose out on the deal, which is unfortunate. We've been there. I'm sure you guys have been there as well.
Exactly.
So, well, as we wrap this up, Mike, what's your guys' look? What's your goal for 2025? What are you guys going to look to implement to raise more equity, especially in this market? Because as you mentioned earlier, we're in a down market. So in our opinion, this is the time to buy. So what's some of your strategies moving forward this year?
Yeah, 100%. So we're super excited about 2025. Again, we feel like we're at the bottom and we're starting to come out, and it's going to take time. Real estate takes time, right? But super excited about 2025. Goals for this year, we'd like to acquire 3 new multifamily projects, ranging in size from 150 to 400 units. And then we're also in the triple net lease space. So we'd like to acquire, 5 to 6 of those projects this year. As far as raising capital, again, just continuing to paint the picture of where we are in this cycle. Real estate cycles really do matter, and people need to understand where we're at in the business cycle or the life cycle of real estate. So continuing to communicate that and building out great relationships, with people like yourself, Dallon, that have that ability to go out there and, tap their sphere as well. It just allows us all to create that much more success.
I think that's why I love the space so much. It's a team sport, and you find good people that you trust, and you're just all able to grow together. So
100%.
How can our listeners find out more about you?
Yeah, so you can go to our website, which is Granite Towers Equity Group.com. All kinds of good stuff there. If you sign up on our form, we'll send you our free passive investing tracker. We'll send you our ebook on passive investing and all kinds of goodies. So make sure to check that out.
Awesome. Mike, it's been an absolute pleasure. Appreciate you coming in, flying. I know you didn't fly in just for this, but I'm glad we were able to coordinate and make it happen.
Thanks so much for having me on, Dallon. I had a blast.
Excellent. And to our listeners, remember, if you're looking to raise $100,000 or more from a single investor, this is the show for you. As you just listened, every one of our guests is going to come in with significant real life experience of what actually works. So we appreciate Mike taking his time to come down and sharing his wisdom with us, and we'll catch you on the next episode.